Ladies and gentlemen, I got people writing to me and say that, Mr. Lu, you missed out such a big bull run from the STI index. The STI index has now hit a near all-time high again. Well, today we shall analyze the Singapore Straits Times Index from the stock market, and let's take a look whether it's worthwhile investing or did I miss that big opportunity, shall we? So the Straits Times Index finally returns back to its all-time high, or nearly returned back to all-time high after 17 years. And before I go on further, these are my disclaimers, not telling you to buy or sell, okay, or any financial advice, okay? Just my personal opinion and personal experience. So the STI have hit a high of 3,700 points. That's almost a 17-year wait since 2007, where it hit about 3,800 points, to where it is now. So it's pretty near where it was 17 years ago. And it's a very long wait. So can you see how long it took to go all the way up? Now, someone might say, no, Mr. Lu, you're an idiot. Why didn't you invest here, okay, right at the bottom, and you have waited about 16 years, you will hit where it was? Or you could buy here and you would have hit such a huge achievement and get some dividends in between. I'm just flabbergasted to see remarks like this, but certainly it's somewhat comforting to see our country key index going back to where its all-time high is. So why did the STI go up so much? Well, the index, like any index, is made up of component stocks. And the key component stocks of the STI index, if you look at the three key banks, DBS, OCBC, UOB, okay, and you plus Singtel, all this will make up more than half the STI. And interestingly, all this has been going up pretty significantly. The STI is a market-weighted index that tracks the performance of the top 30 companies listed in SGX. And again, right, for most people who are only familiar with the Singapore stock market and haven't touched overseas stock market, especially US one, and your mind will be very fixated on what this index is. And so was I. So why has the STI been going up? Well, largely because the bank stock has been doing well and Singtel has been doing well. The shares of the Singapore 3 big index have hit record high after another quarter of strong profits. I'm not a big believer of Singapore stocks, but I must confess that the banking stocks has done tremendously well. Almost everything else has been a big disappointment, but the three banks certainly have done very well. And the three banks largely was able to do well consecutively for these few years because the interest rates are very high. That's largely because the interest environment globally is high as the Federal Reserve hiked the interest rates. Now, in recent months, the interest rate has come down, and certainly this marked the end of a high interest environment. But fortunately for them, they certainly have high returns from wealth management fees and trading as well. So that kind of boosts their profits. Will the good days remain ahead? I think it's hard to say. The bank interest rate is certainly going to decline more with the Federal Reserve over time cutting their interest rates. And that's something that, I would say that it's hard to say whether the bank can continue to perform that well. But fortunately, the bank does give pretty sizable dividends as well. I'm very fortunate. I got some, not a lot, some OCBC shares. And we bought those during the Great Recession. So I think OCBC, I bought it probably around $5 or so. Don't have a lot, but I got some lots of it. And that has since then grown about 3 times. So that's a remarkable number. Unfortunately, I don't have big numbers inside. Singtel, on the other hand, has gone up significantly as well. Singtel largely because it's monetizing a lot of the hidden value. So this is the new philosophy by the new CEO, where it's going to uncover all the hidden value of Singtel, and that's truly an achievement. He has started liquidating some of the assets. So, for example, Singtel has some exceptional gain from the dilution of Singtel's equity in Airtel in India. So it's brought down the shares by a little, not that a lot. And this because Airtel is such a big company, so they actually got an exceptional gain of $88 million. That's pretty exceptional. And they are also making exceptional gain from the sale of telecom towers by Regional Globe as well as Airtel share and etc. So Singtel is going to do more of that, and I think Singtel share will continue to jump more and more, and that's a very positive thing. But at the heart of it, the STI index is a composite of many Singapore companies that's highly dependent on Singapore economy. Arguably, Singtel, bulk of their businesses is already out of Singapore, so not so bad. But I think the local banks are heavily dependent on Singapore economy. To see the performance of the STI, we can ask ourselves what's the performance of the Singapore economy moving forward. It's hard to say, but I think I'll use the word Singapore economy in the near future, so-so, right? It's not going to be bad. It's not going to be exceptionally good. So for the third quarter of 2024, the Singapore economy has grew by 4.1%, and that's very strong for a developed economy. But the 2024 key export forecast has disappointed many analysts. The analysts polled by Bloomberg expected a 4% rise in the non-oil export, and unfortunately, it turned the other way around. It turned negative 4.6%. So it's quite a significant turn of event. And if this is going to continue, then we are in for some rocky times in our Singapore economy. And not to forget, the Singapore economy is highly dependent on export, and one of the key export countries is China. And China's domestic economy is pretty bad, and as a result, this will drag Singapore down as well. So back to the STI. The STI dividends are pretty decent. Unfortunately, the capital gains has been pretty disappointing. The STI has just recovered today where it was 17 years ago. It's not reached there yet, but it's reaching there. But in the same 17 years period, the S&P 500 has went up by almost 4 times. 4 times. That's even higher than my OCBC. And in the same period, the NASDAQ has went up by 10 times. That's extraordinary, right? So question right now is, do we expect there to be a comparison at all? No, I would say on the surface, not quite. And for other people, I say that, the S&P 500 is highly volatile and the NASDAQ is highly volatile and STI therefore may not be volatile. That's not true. The STI was also very volatile in those periods where the S&P 500 was volatile. It's probably not as volatile as the NASDAQ, but it's also very volatile. The low returns does not come with lower risk. So I will still avoid the STI as an ETF to purchase. And I have a trauma that I like to share with everybody. And many years ago, I think around 2003 or 2006, I bought a lot of STI because I believe in compounding and I believe in indexing. So I don't quite understand indexing. You need to be indexing the right index. So I suppose that indexing applies across all index. So in my stupidity and naive youth, I actually bought a lot of STI index, much, much more than my S&P 500. And I waited and waited and waited, and I waited until 15 years of waiting, and I gave up. I sold it all, okay, and came to realization that that was a huge mistake. So I gave up and bought S&P 500 instead. Thank God that still, recover quite a bit of it. Unfortunately, not enough. And the STI did give some return, but it's miserable return relative to what it was. Now, can we extrapolate my STI experience to the whole Singapore stock market? Well, it depends, right? Singapore stock market, you got to be very good with stock picking. And with the exception of Singapore banks, I would say that the rest are not quite to my liking, and it's very difficult to stock pick. So I will avoid the Singapore stock market altogether. I would say that it's something that I can afford to avoid. There are some people who insist that they want to hold STI index because that's the only thing I'm familiar with. In that event, in my personal opinion, I'm not advising anybody. I would say that if one have to hold the STI index, it's probably good to hold it for dividends and for diversification. But whether if you are hoping that you will compound powerfully by S&P 500 and NASDAQ, I think the history is against you. So I would personally hold it, if I have to hold it, which I don't, I hold it for diversification, but not too much of it. It's also noteworthy to know that the S&P 500 STI, when there's a decline, both decline together. Okay, when there's an increase, the STI doesn't increase. That's the worst part. So I have a very bad opinion of STI index, and that's something that when I first mooted this idea many years ago, calling the Singapore Terrible Index, I've got many people who are so against what I said. I think for now, after so many, quite a few years, many people came to the same opinion as well. What about you? So thank you for watching, and let me hear your opinion as well, and I'll see you in a day or two. Bye-bye.